And I'm going to make Cyril a co-host here. And thank you again for joining us today. Cyril, I'm turning it over to you.
All right. Hello, everyone. And thank you for giving us your time today to learn more about the wonderful IRS. And it's not a topic that a lot of people like talking about. And being in this industry over 25 years in the tax and financial field, what I found, I spoke with a client last week. She said, Cyril, I hate the dentist, but I hate the IRS more than the dentist because she has a fear of needles. And the thing about it is, what we're going to do is take out your notepad. I'm glad it's being recorded because it's going to be like drinking from a fire hose. This tax law in the scheme of things wasn't a big change, but because of the amount that's impacted on you and I and business owners, it's going to be a lot. And we'll have questions and answers at the end to help you ask more specific questions. A lot of this information is going to be higher level general, but I'm going to give you enough examples so you can leave here with tangible information to help you move forward with your taxes for 2022 and beyond. Okay, I'm gonna start off with the recent study. And actually it's not too recent because we are now in 2022, but a poll was conducted some time ago and it said, a recent NerdWallet survey found 7 out of 10 taxpayers have concerns about filing their taxes. Number 1, making mistakes. Number 2, paying too much. The next one, not getting the biggest possible refund. Then all the way at the bottom, it was getting audited, 11%. But what's happened, that is starting to move up because what's happened is the IRS is now in a more aggressive mode. I've gotten more questions about the IRS enforcement in the last 2 months than I have probably in the last year because of the news and the media and what's been put out there. But we're going to go deeper in this today to help you understand what's going on. Learning objectives. Part one of this is going to be the Inflation Reduction Act. They call it IRA. Don't like the acronym, but that's what the IRS does. They have acronyms for almost everything. Of 2022. Part two will be tax law changes to get prepared for. And part three is going to be what next. When I do these types of workshops, I always want to leave you with homework and things you need to check on for your personal situation, whether you are actually a business or a personal filer. Now, this is a lot. In the last 3 years, we've had 5 major tax law changes. 5. We have not had 5 tax law changes prior to now in the last 5 years, but we've had 5 in 3 years. So what that tells you is Congress and the IRS has been very busy trying to manage COVID, manage the economy, and make sure that they're passing laws to assist with whatever they can to assist us. It started with the Secure Act. Oh, it went on, sorry. It started with the Secure Act. It went to the CARES Act, then the Consolidated Appropriation Act, ARPA, American Rescue Plan, and then now we're in the IRA. And that's what we're going to talk about today. But I wanted to let you know there's been a lot of changes in the last 3 years. We have a lot of clients coming into our firm that's been, for example, on TurboTax for 3 years. They've missed all of this. So when they come in, we're having to give them 3 years of updates in a 30-minute session or an hour session, and it takes a lot of time to go through it. So here's where we are. Part one, the Inflation Reduction Act, IRA of 2022, everything you need to know. Now, we're going to take it from a higher level point of view for things that will affect you and your home, and things that are more Google, Apple, Amazon type stuff. We're not going to get into that unless you're a VP for Google or Amazon. Then we'll get into that today. But other than that, it's going to be stuff that affects us right here in Burlington and the surrounding areas. This was the biggest question I've gotten out of this act. Cyril, I have heard the IRS is getting a raise. Yes, the IRS is going to get almost $80 billion from this act. 80 billion with a B. That's a lot of money. And I see Duffy on here, he's a banker. He'll tell you anything with a B in front of it, when it comes to money, it's a lot of money. So what happens is I made this red because I want you to see on the slide where over half of the money is going. Enforcement. Now, I get this question a lot. Cyril, what does that mean in English? We're going to get into it because if you see that big check marks at the bottom, the IRS will be hiring 87,000 new employees. Now, let's frame this and really break it down so you understand what's going on. That 87,000 employees is over a 10-year period. That's number one. Number two, over that same 10-year period, there are people that are going to be retiring at the same rate. The net difference is they will have more people. They will have more people. Every IRS agent I've met up until recently are in their late 50s, early 60s, all of them. And they will be retiring over the next 10 years. COVID has sped that up. So now when you take the fact you have people retiring, but they're literally trying to hire 2 to 3 to 1, there will be more IRS agents, processors, customer service, and things like that. Now, as we go forward and look deeper at that almost 45.6 billion, that first bullet, determine and collect taxes owed. We do a lot of IRS assistance here at our office. And the way we handle that is if a client is in IRS trouble, we get something called an IRS authorization, and we speak with the IRS in their place. So we had an IRS agent stop by our office last week because there's a client that hired us, and by law, they can't come by your house anymore. They have to come here. So he stopped by and said, hey, this person you have authorization for has a tax owed. He came here. So that first bullet you see, determine and collect taxes owed. They want to get missing money that's out there. Second bullet, provide legal and litigation support. The IRS sues people to take them to court to do certain types of levies and liens. So if it's a big enough case, the IRS has attorneys that will go to the next level, or if it's a criminal case, to prosecute you for tax fraud, tax evasion, things like that. Conduct criminal investigation, including investigative technology. That means they're wanting to get more infrastructure for monitoring us in terms of what we're doing on PayPal, Venmo, Cash App, and things like that. They want to invest more money to be able to look into that. Next bullet, provide digital asset monitoring and compliance activities. By a show of hands, who's ever heard of Bitcoin? Now, I'm gonna ask this question, don't raise your hands. By a show of hands, who bought some Bitcoins? Don't raise your hand. By a show of hands, who sold some Bitcoins? Don't raise your hand. So you got Bitcoin, you got Litecoin, you got Dogecoin, you got all these different cryptocurrencies. The IRS is not stupid, ladies and gentlemen, they're just slow. So what's happening is they're saying we have to get ahead of this cryptocurrency issue that's going on. They just issued earlier this year, end of last year, what's called a John Doe summons. What that basically means is they're going to these crypto companies and they're saying, hey, Coinbase, here's the John Doe summons with no one's names on it, but we're going to subpoena everyone in your database that has cryptocurrency. And guess what? If you didn't file it on your tax return, they're doing a data match. This is going on now. So this 45.6 billion will enable them to deeper dive into that. Enforce criminal statutes related to violations of internal revenue laws and other financial crimes. And the last one is purchase and hire passenger motor vehicles and provide other services. So as you get to the bottom of these bullets, you see it gets grayer and grayer and grayer because the IRS operates sometimes in shades of gray. And what happens is what they're saying to Congress is, look, we know the first few bullets are cut and dry, but those last two bullets, we need some area of flexibility so that we're not going to show our hand. So to answer your question, do you feel the IRS will have more transactions and more litigation and more audits and more activity? You have 45.6 billion reasons to say yes, right there. Okay. Next slide. Affordable Care Act, also known as Marketplace Insurance, also known as Obamacare. What these bullets are talking about is what's changing under the IRA Act for 2022 and beyond. What happened was, due to COVID, the first bullet, when they changed this due to COVID, it made it easier for people to qualify for the marketplace insurance. Second bullet, what this act did, it did two of the modification extended through year 2025. And in the third bullet, it basically meant that before, if you were over a certain income range, you could not get any help. Now they've changed that where people over certain incomes can get help. But the unemployment provision was not extended. So if you had unemployment anytime during the year, it triggered certain things. That's not extended. That ends December 31st of this year. The bottom line is ACA, Affordable Care Act, is easier to get and easier to keep. So any friends and family that are between jobs or think, well, I make too much money, this act just made it easier for you to get it and keep it. In health insurance, I don't care who you are, it is expensive. And you want to make sure if there's a government program where you can possibly get assistance, then you want to definitely try to utilize that. Planning tip. If you have this type of insurance, update your information now because the subsidies are higher for 2023. Call your agent, go online to healthcare.gov and update your income information for 2023. It will help you. Second bullet, there are new plans entering our area every year. It's not just a Blue Cross and Blue Shield anymore, ladies and gentlemen. There are many companies out there. It's zip code based, but make sure you look for new companies entering for 2023. And this is the third bullet that gets a lot of our clients. We just made a call to a client in Florida. If your income increases and you're on this insurance, you must notify your agent or your marketplace rep because they will make you pay that money back on your tax return. You have to update them real time. Okay, this is one that we've been getting a lot of questions about, the energy credit. The old energy credit, you got $500 per lifetime. Then put a roof on your old house and you move to a new house, needed a roof, it's gone. If you got a certain type of water heater 3 years ago or 30 years ago, not 30 years ago, but 15 years ago, and you used it, it's gone. This energy credit has been started and stopped since 2005. It was due to end this year. Well, guess what? It's got a new name and it's been turbocharged. The new name is the Energy Efficient Home Improvement Credit is a new name. It takes the $500 that was there and it supercharged it to $1,200. Now, the first bullet, let me explain what that means. This $500 credit was scheduled to run out last tax season. They've said, we're gonna give you $500 one more year. And then starting 1/1/2023, you will get $1,200 every year, max. So any of you looking to do windows, doors, closing that deck, anything like that, this is going to give you an actual credit on your tax return, not a deduction, a credit, which is a lot better. So those home improvement projects, let's listen to this because you may want to start now or start in 2023. Home audits. I had one done about 2 years ago. This company came out, did a home energy audit. That's now something that you can get credit for on this particular new credit. Roofs, gone. So if you want a roof, you have to do it by December 31st or enter into the contract because that is gone. And now it goes from 2023 to 2032. The government is big on green at this moment, and anything energy efficient, they're putting money towards it to have us go green, and they're giving us money in our pockets to do it. Now, this list gets muddy. I'm glad she's recording this because you're not going to remember this. Here's the thing. You have a $1,200 max limit standard. But if you look at this list, you will see, $600 for energy property expenditures, windows and skylights. So if your windows cost $5,000, the max is $600 for that type. Your exterior door, $250 max. All exterior doors, $500. Home audits, $150. But look at the last bullet. The last bullet is for those big ticket items. $2,000. So that's IRS for you. They said $1,200 max per year, but then they said for heat pumps, heat pump water heaters, biomass stoves, and biomass boilers, they will give you a $2,000 credit. So if your heat pump is on its last leg, don't replace it this year. Wait, limp through, get your space heaters out, get some blankets, put some wood in the fireplace or something like that. Try to get it to 2023 and you can get up to a $2,000 credit for getting that replaced in 2023. This is huge, never been done before. Now, let me give you some more tips. There's no income limit on this. Whether you make $500,000 a year or $150,000 a year, there's no, anyone can get this credit. Second, primary home only. Your beach house, your lake house, rental property doesn't apply. This is where you lay your head primarily, primary home. All right, buy your roof this year because next year it's gone. I hate they pulled that out because in our area with the sun being like it is, we do roofs, and in North Carolina, to get a roof, you're looking at least $3,000 to $8,000 minimum to get a roof, but that's gone now. All right, expenses that only qualify for next year, 2023 and forward, home energy audits, biomass stoves, boilers should be made starting next year. Next bullet, do your window upgrades over 2 years. So I did windows in one of my rental properties, and the vendor had an option where I can order some windows this year, some windows next year. Well, it's a rental, so it's not going to qualify anyway. But if you are a homeowner and you want to get the main level done this year, get the credit, the max credit you can get for windows, and do a front door. Then next year, do the top level of your house, then do the back door. You're able to get more government help on getting those upgrades done. Main bullet, check with your vendor and salesperson to ensure your equipment will qualify for credit. Do not just buy it and hope. Do your research, do your due diligence, because that's going to be very, very, very important. This is the Mac Daddy. Solar panels. Solar panel companies have attacked North Carolina. I get phone calls, I get emails, they knock on my door. They're all over. They're coming out of woodwork because of this right here. So it's a lot of bullets, and I'm gonna go through it and take my time so you understand. The bottom line is, if you are in the market for solar, now's the time. That's pretty much the summary for all of this. So first bullet, qualified solar electric property expenditures. Now, I'm gonna break that down because I had a case that I heard that this happened to. If you are looking to get solar and the solar company has said, Stephanie, that big tree is blocking your solar system, we're going to cut down that tree or cut the limbs off of that tree, put it into your solar bill. That now can be part of your credit. So anything relating to that solar being installed is a part of that credit. Big deal, big deal. Next bullet, qualified solar water heater heating. I don't know anybody got a solar water heater, but they exist because the IRS wrote it. That's in California. Qualified fuel cell property expenditures, qualified wind energy. I haven't seen a windmill lately in Alamance County, so that's not us. Geothermal heat pump, that's a big one. Biomass fuel and battery storage. That's what I'm going to dig more into. A lot of my solar clients buy the big wall batteries in their garage. So what happens is when the sun is out, the batteries store the energy, so that when the sun goes down or the power goes out, they're using the stored energy in the battery to keep their power bill even lower. So something's changed on that I'm gonna go over. So they're calling this the residential energy credit. Forget all the black on the left side, go to the right side and jump to the red. 2022 through 2023, 30%, up to 30%, I should say, of the total installation of that solar system. That was at 26% until August when they passed the new bill. It was going to drop next year to 22%, but now it's going to be 30% through 2032. That is huge. Now, I'm going to tell you something that the solar guys or gals may not tell you. Make sure you buy solar when you have a big tax bill due. This is not a type of law where you get a check in your hand. Case in point, I had a client in Greensboro, senior, She bought solar in Greensboro. Whoa. And she spent about $40,000 on the solar. And her tax bill, because she was pre-retired, had started to drop. Well, the solar guy told her, well, ma'am, you're looking at a $7,500 credit. All it does, it offsets your tax bill. So had she had a $7,000 bill to the IRS, it would have wiped it away. She didn't. So as a result, she had a modest refund, but she sued the solar company. She called News 2, Channel 8, all of that, because she felt they lied to her. So what I would tell everyone, especially our clients, consult your tax advisor if you are looking at getting solar, so that your tax professional can run the numbers to see if you should get it this year, get it next year, depending on your income situation. Because the more income, the better solar helps you. Planning tips. This credit is available for any residence of the taxpayer, except for fuel cell property. It's primary residence. So basically, if you have a house at the lake, you can get it. Beach house, you can get it. So any other residence, not investment property, but residence that you have, you can get the solar credit. That's huge, because that means you are able to take this in, sometimes potentially multiply, if you get a deal with the solar company and do both of your homes at one time and get a better price break. So the rate for tax year 2022 is 30%. There's no need to wait. The battery portion of it, you have to wait until 2023. So my advice would be, if you get solar in 2022, don't buy the battery until 2023, and then get that piece in 2023. Now, my clients in California, they have a special extra solar credit that the state gives them. Our state stopped solar credit about 5 years ago. Hopefully they bring it back, because all this green stuff is going on, but North Carolina currently does have no solar credit in North Carolina. Like I said, add your batteries in 2023. Now, for you home office people, how many of you are self-employed and work from home by show of hands? Okay, so I see a few hands going up. So what happens, this bullet is for you. If you are self-employed or have a business and you have a home office, as long as your home office on your tax return is 20% or less, what you're able to do is depreciate part of the solar equipment as a home office deduction and get the credit. So you're able to double dip in a sense, because you get the write-off under your home office, a percentage, and you get the full maximum credit if you qualify, because you have a business in your home. So keep an eye on that if you have a home office and get solar. That's a powerful one. And last bullet is, I found this out and I verified this, is you hear the commercials where we're going to make your meter spin backwards. Well, I don't know if that's true or not. But at the end of the day, what happens is this. If you generate excess solar, from what my clients tell me that have solar, there's been months they had a zero bill from Duke Power, zero. So what happens is this, they in essence negated the bill that Duke Power had for them. But in the case that you're in an area like Piedmont up in Caswell County, if they said, we're going to send you a check, Stephanie, because you generated such a big power bill, credit to us, that money is tax-free. So the government considers it a rebate and not income. So if you get a big enough solar system, Duffy, and you're like, you know what? My solar's paying my mortgage. Great, tax-free. It'll probably never happen, but it's good if it does. It's all tax-free. This was the one I was waiting on. Clean vehicle credit, or EV credit. So many people have been telling me they want to buy EV, they want to buy a hybrid, but wait on this law. I told all of our clients to wait until the law came out. It's here. And it's a lot to go with it. So at the end of the day, first bullet is the provision applies to vehicles placed in service after December. You know what? I'm going to cut to the chase. I'm going to put a link in the chat. So if you are looking at a vehicle right now, you want to go ahead and look it up on the government website. Because what happens is once we get past, which we passed August 15th, if you're trying to get this new credit, this law is going to start to take place. So number one, what we want to look at is if you, let me see, August 16th, 2022 is when this starts to kick in. Now, here's a but. If you said, I already have a Tesla ordered, let me back up. This does something major. I have a lot of clients that's bought Teslas. The way the old law worked is this right here. Tesla has ran out of inventory in terms of government credit. When Toyota says, I'm building a Prius, the first 200,000 gets the credit. Once it reaches 2001, no credit. So every model of every manufacturer gets a count. And once the government reaches a certain count, no credit. So all the people you know that's bought Teslas in the last 2-3 years, no credit. With this one, it takes that cap off. So the manufacturer, now people that wanted Teslas can buy them and get the credit. That's the major part of this law. People that's bought Toyotas, Hondas, Fords, those credits are still out there and they're still going strong. What I want to do is draw your attention to the right side of the slides. Is this bill is divided into two things, total electric and hybrid. I love the fact that you can buy a hybrid. I own a hybrid. I have gas on one side and electric on the other side. So I have a hybrid vehicle. That means it can run off of gas or electricity. The max credit, $7,500. There's no limit on the manufacturer. And starting in 2024, if Barbara walks into Cox Toyota and she finds an electric vehicle she wants, she can tell Cox Toyota, have my $7,500 credit go straight to Cox Toyota, and they will reduce the price of that car on the spot. That's going to be starting 2024. Now, there are income limits as well as price limits. If you see that on the right-hand side, retail value for vans, SUVs, and pickup trucks cannot exceed $80,000. So Duffy, that Porsche Taycan you're looking at, don't qualify because that's 150. Can't get it. But you can get that Mustang Mach-E. You can get that. Cars, 55,000. So you can get a pretty nice EV for 80,000, SUV, van, pickup truck, or 55,000 for a vehicle. Now here's the other kicker, AGI. If your household income for husband and wife is over $300,000, you cannot get the credit. Period. Can't get it. If you're single, 150 and under, you can get it. $1 over, you cannot get it. Or if you're a surviving spouse from a widow or head household, $225. So it has income limits. So if you're looking to buy an EV and you're over that AGI limit, buy it now. Or let's do some tax planning to buy it in 2023 by reducing your AGI. So here's a look at the second to last bullet. The qualifying vehicle must be sold by a qualifying manufacturer, and the taxpayer must provide the VIN number on the tax return. You cannot buy this from your cousin Craig. This has to be bought from a dealership, and this is a brand new car credit. And only one credit per VIN. So you can't buy it and then give it to your cousin and they take the credit. The IRS is going to be tracking that. Now, so where we are is planning tips. If you $1 over, you can't get it. So what I'm thinking about and looked at and researching is maybe do married filing separate and have the spouse with a lower income buy the car. That's an option. If you're going to be over the threshold, we may need to look at, especially if you're self-employed, let's look at doing some things to do some tax planning to bring that income down and qualify. And keep in mind that this is a very, very, very new credit and guidance is coming out. But before you sign on the dotted line, talk to your tax professional to ensure that you are in the flow of getting that up to $7,500 credit, which it was $75,000. Used cars. This is brand new, hot off the presses. When I bought my hybrid, it was used. Now they have a provision to get a used car EV credit. It goes down a little bit. It's $4,000 up to $4,000 or 30% of the sales price, whichever is less, on the used car. Number two, no requirements. The brand new car has a requirement starting next year where the minerals, and they want it to be US based. Used cars, it could be a used Taycan Duffy. So if you find a used Taycan, you can buy that one. All right. Vehicles placed in service after December 31st, 2022, and the credit terminates with respect to all vehicles placed in service after 2032. Bottom line, that's IRS talk for saying you have 10 years to do this. The VIN must be on the tax return. AGI. AGI is a little bit lower. The adjusted gross income for the household is half. So if you married, filing joint, the most you can make and get this credit is $150,000. Surviving spouse in a household, $112,000, and if you're single, $75,000. To me, that's a little low. That's a little low. Hopefully they'll update that as they modify the law. All right, and here's another sticker. You cannot get this credit on a very old EV car. It has to be within 2 years of the year you're in. So in 2023, the car has to be at least a 2021. So you can't buy a 5-year-old Tesla 5 years from now. It's too old. They want the battery to still be good enough to give you good use. Just like your cell phone battery over time loses capacity, those do the same thing. Second to last bullet, you cannot flip cars. So you cannot get the brand new car credit in 2022, then in 2023, sell it and get the used car credit. They're watching that. They thought of it. I'm saying they're not stupid, they're just slow. So they're thinking about, okay, how can we make car flippers not do this and get tax-free money? And then last bullet, starting in 2024, you can have the up to $4,000 or 30% go directly to the dealer, used car dealer. The IRS will double check at tax time and pay it back. Now, I use Barbara as an example. So Barbara went to Cox Toyota, bought that brand new car or used car, and Cox Toyota got that up to $7,500 or up to $4,000. And Barbara hit the lottery. She said, Cyril, you know, I did a pick 3. I got, $500,000. The IRS at tax time, when Barbara files, they'll say, okay, Ms. Milliken, we see Cox Toyota got that $7,500 based on your AGI, but now your AGI, you just added $500,000 to it. You have to pay that money back at tax time. So my tip would be buy it in December, or be very, very, very careful. You buy it middle of the year, beginning of the year, because if you go over that threshold, you better be doing some planning to get your numbers down so that you don't have to pay that money back if the dealer got it directly. All right, more planning tips. Where it's manufactured doesn't matter. The battery capacity doesn't matter. All the stuff that the brand new car had on it, these are things that it does not matter, and the MSRP doesn't matter because I already said it has to be a certain amount of money, and it must be from a dealer. That I cannot stress that enough. Craigslist, Facebook Marketplace, you have to buy it from a dealer, not from someone selling it in their front yard. It has to be from a dealer. All right. Business owners. This is a big one. If you said, Cyril, I make over $300,000, I'm a business owner, buy it through your business. That's all this slide is saying. No income limitation. If you don't have a home-based business, you might want to start one. So this right here gives you the option to no income limit, buy it through your business, get up to 7,500 as long as it weighs less than 14,000 pounds. And for all my truck drivers, my transportation people, you can get up to $40,000 credit. That's right. Exactly, Stephanie. 40,000. So that Tesla semi that's been in development, hey, 40,000, they would help you buy it. So loophole, buy it through your business or start a business. Mary Kay, you know, facial stuff, Rodan Fields. So now, tax planning tips for people buying this. No income limit for the commercial. There's no limitations. The credit is the basis of the credit comes off of the vehicle. So when you do a commercial vehicle, we depreciate it. So if you actually buy a $180,000 semi, the 40,000 comes off of the basis because you get actual credit immediately. So the government has to reduce that, and it's brand new vehicles only. So this has no used vehicle feature. All right. New tax laws. We're rounding the corner. Part 2. Charitable contributions. Back for the last 2 years, you can say I gave 300 or 600 if you're married, and the IRS lets you write it off. No questions asked. Gone. Gone are those days. So it's back to the old rules of if you don't itemize, you don't get it. And the 100% write-offs is gone. So it's back to the old rules. Itemizing gets it. Other than that, you don't. And make sure you get a letter from your charity. Student loans. Don't raise your hand. I was going to ask how many folks you had student loans left over. Don't raise your hand, please. Please don't raise your hand. I had mine so long, I thought it was a pet. I'm telling you, I almost named it. So do not raise your hand. This student loan forgiveness, all this bullet is saying is the IRS has come out and officially said, if you are one of the millions that will get your student loans forgiven, tax-free. No taxes. Guess what North Carolina said? They're going to tax you. So if you don't like that, call Raleigh. So North Carolina will tax you on any loan forgiveness you get. The IRS will not. Okay? Children. I see Lisa on here. She got some grandbabies. So Lisa, listen up for your grandbabies. Even though you don't claim them, let your daughter know and your son-in-law that that $3,600 they got, gone, back down to $2,000. That $2,000 they got for all other dependents, back to $500. Yeah. So what's going to happen if you have children on your tax return? It's going to be a contraction of your refund in 2023 when you file. Or if your tax bill that was normally pretty high came down, it's going to creep back up because the credits they gave for children the massive credits are gone. Or you could just have another baby. That works too. So, all right. Personal tax law changes for all my teachers, educators, principals, TAs, substitutes. You now get an extra $50 in supplies. It's been $250 forever. Now it's $300. Woohoo, need to be $3,000. As much stuff as you guys buy. Student and loan FYIs. This is for people that have 529s for their children. They changed the law so that now you can use your 529 for a private school. That's very important. So you can put money away tax-free as a tax deduction and then pull it out tax preferential and pay for BCA, pay for the Burlington school, and any Montessori school. You can use your 529 for that. And it's a good deal. And any of your college students that work on campus and work study, make sure they refill out their W-4 and put exempt in that box because it's now tax-free, totally tax-free. So they have to make sure they fill that out. Okay, business owners, mileage rate adjustment, July 1st, increased to 62.5 cents a mile. So that app on the screen, that's what I personally use. It's about $60 a year. If you're self-employed, business owner, download that app or one similar, and the app itself is a write-off, and it uses the GPS in your phone. So every time you move with your phone, it calculates the mileage for you. So mileage rate is up, and keep an idea that. Oh, and charity. This is a tax tip I give all of my choir members, my ministers, associate ministers, deacons, trustees. When you go into the church for those meetings and board meetings, or if you're on the board of the Girl Scouts and the Boy Scouts, track that mileage. Track that mileage because that could help offset your tax bill if you itemize. And my clients that are Jehovah's Witness, they rack up a lot of miles when they ride. So we want to make sure that we have that documented. Okay. Okay. Just got back from a conference in Vegas, so I'm gonna miss this one. Business meals and travel are 100%. The meals go back to 50% next year. That was a law to get restaurants back going. So they gave all of us business owners 100% write-off. So lamb chops, steak, curry, whatever you like was 100%. That's gone back to half. And if you file W-2s or give them out to your people, make sure you get those in by January 31st. That fee is $100 per W-2, per 1099, and goes up to $100 if you're beyond 30 days late. Nasty little penalty, but they're coming out with letters all the time. Giving. Lisa, if you decide to give your husband $250,000, it's totally tax-free because that's your spouse. Now, if you said, you know what? No, I'm not using. If a single person got married and said, I'm marrying Juan, but Juan is a non-citizen. He has an I-10. You can only give Juan up to $164,000 tax-free. Once he gets his papers, it's like Lisa and her husband, unlimited. I get this a lot. Cyril, what can I give to my family tax-free? $16,000 per year, no questions asked. So if Lisa and her husband wanted to gift her daughter money to buy a house, for example, she could give $16,000 and her husband could give $16,000 tax-free. No questions asked, no tax return needed. Once you go over that, I suggest Lisa and her husband do a gift tax return to document it for the IRS purposes. So that's basically, and that's for children, grandchildren, whoever you want to give it to. So any of you writing $16,000 checks, it's CYRIL. That's my first name. So that's a really good thing to know to get money given while you're living in here without them paying taxes on it potentially. All right, as we get close to wrapping it up, Hurricane Ian just came through. Thank God didn't do much damage, but we were now declared a federally declared disaster area. What that means is we now have until February the 15th to file our taxes. If you haven't already, I hope you have. Or you have until February 15th to file the state as well and make estimated payments. They gave us a whole additional 4 months. And if you had a loss from the hurricane, follow these notes, get 2 estimates, document it, and we can write those off on your tax returns. So be careful if you had losses like my clients down east, when I forgot which hurricane it was that came through and they lost a lot of stuff. We wrote off a lot of things for them because many didn't have flood insurance and FEMA did not replace their home. So, but keep in mind, February 15th is when those tax returns are due. Okay? Fees for installment agreements, if you owe the IRS, fees are going up every year. All I can say is do your payment plan online if you're wanting to do that, or contact a licensed professional like our office to help you make that payment plan. But do not ignore the IRS. They're waking up. They just hired 4,000 people over the summer, and I saw an ad where I'm hiring another 1,000 by the end of the year. So do not ignore the IRS. They will eventually catch up with you. Part 3, what's next? If you cashed out an IRA in 2020 due to COVID, you have 3 years to pay it back. So if you have a really good run in your business or found the job since then it's paying you well, then if you want to pay that money back, you can pay it back and your taxes can be redone and amended, and that money is reversed and the tax you paid will be refunded plus interest. Number 2, look at your paycheck stub. So many of us get digital emails, but never click on the link and look at that stub. Look at your stub because you may need to make withholding adjustments because of all these changes. Number 3, if you have a college student, make sure they're working on campus, work study, do exempt. If you're 72 or older, getting your RMD, minimum required minimum distribution, you have to start taking those now by law. That started again this year. Take that RMD. If you don't need it, talk to us or a financial professional to give you some options on what to do with that. Businesses, if you are hiring, and this is for the chamber, people coming into the area, there's something called a work opportunity credit. It's a massive credit for people on public aid, for people that have certain types of history with felons. It's a list of things that if you hire those segment of peoples, veterans and different things like that, they will give your business a credit. Nice credit, work opportunity credit. Businesses, deep dive into your P&L. Look at your numbers. If you're having a really good year, you might need to hold some invoices and not build them for 2022. If you're having a real good year, you might need to pay some bills early for 2023 and get that money out of your account to bring your income down. You might need to look at year-end bonuses, equipment purchases, and at the end, get a tax plan estimate for your business before Thanksgiving. Talk to your tax professional and say, look, I went through this 3-hour workshop in 50 minutes. And I got a lot of questions about what I need to do with all these changes. And I want to buy a Tesla. Make sure you get the information. That is the applause, or either standing on the line. I don't know which one. We are done. And what questions do you guys have?
I have a question.
Yes.
All right, you talked about if you took money out of your IRA
Uh-huh.
from 2020 to whenever, what does that mean about paying it back? Like, I want to know more about that.
What you literally do is you contact Charles Schwab Fidelity and say, hey, I took out 50,000. I want to pay it all back or part back. And literally they give you the guidance and how to send the money back. You write the check, mail it, once you get proof that's been processed, get that tax return redone.
Okay.
And all those taxes are reversed.
Because you were taxed on the money. That's what you're saying. So if you pay it back,
Exactly.
then it reverses. Okay.
Yeah, plus interest.
Oh, cool. Okay.
Yeah.
Good to know.
Yeah. Lisa, question?
Hey, you mentioned heat pumps. What about gas furnaces? Those weren't specifically listed on that list.
The thing about it is the gas furnace, I'm gonna put it like this, HVAC period. If you're looking to buy one, check with the vendor, double check with the vendor because they have a more detailed list, like a biomass. I've never heard of a biomass,
Yeah, I
but
don't know
my
what it is.
clients up north have boilers. My clients in New York and New Jersey and Connecticut, they have boilers in the basement. So I would say, Duffy, if you're looking to replace something like that, check with the vendor, and then since you have an awesome tax guy, check with him and he can give you more guidance on it. Can't say who that is by law.
Any other questions from anyone?
Well, Cyril, I wondered, do you do like estimated tax even if you don't do the business tax, excuse me, or the individual tax, you do estimated tax payments?
Yes, we have a special setup here where we do consulting for people. So let's say their CPA is in Texas or in Raleigh, but they live in Burlington, or we have a natural affinity because we're in the same circles. They're like, hey, Cyril, here's my P&L, figure up my income, figure up my estimates. We'll actually figure it up, give you the coupons, and make the payments for you.
Okay, we need to talk about that.
All right. That is my contact information. We're located right here next from the beautiful Arboretum across the street and right down from Williams High School. So we've been in Burlington many decades. We enjoy it. And obviously the IRS can be painful. It's just that you do not want to be ignorant and you want to be well-versed. And if you ever get a letter, or if your friends get a letter, tell them do not answer, do not call them back without talking to a tax professional. And if they get a knock on the door, because now they're out visiting people. They're out visiting people now. If they get a knock on the door because it's gone that long through COVID and they've not done anything, when they said, I want to speak with you, and they give you identification, they're going to put something in your hand called the Taxpayer Bill of Rights. Now, if you've ever been arrested, they're going to say you have the right to remain silent. They read that to you because that's the Miranda rights. When they show up at your house, they give you the Taxpayer Bill of Rights. In there, it says you have the right to representation. Therefore, don't say anything. Say, you know what? Thank you for the letter. Thank you for my notice. And I'm hiring someone to talk to you. And they can't make you talk. That's how fish get in trouble. They open their mouth. Don't say anything. Hire someone, call our office. Even if we're not your tax professional, we'll give you advice. We do second looks. We look over your things because you want to be aggressive and proactive in this environment and not be passive and say, well, it'll happen. No, be aggressive and proactive and get ready for tax season now and not in January.
These are all great tips. Cyril, thank you so much for this information. I learned a lot. Hope you all did. So we have to convert the recording, which takes a while. If anyone is interested in receiving a copy of that, I know Lori wanted a copy. I'll be happy to send that to you. Just let me know. We will hopefully have more of these to come, and I'll be emailing out a quick survey sometime in the next week or so, and just trying to get some feedback on other topics that you all might be interested in. Kelly, anything else?
Nope, you covered everything. As always, please keep looking at the Chamber event calendar. Stephanie and I, like she mentioned, are working to have more of these in 2023 as the needs come up. So please visit alancechamber.com. We would love to have you join us.
And Cyril, thanks again. We appreciate your time. You all have a great rest of your Monday, and we'll hope to see you soon.
All right. Thank you, guys.
Thank you.
Call me Cyril.
Thank you. Have a great day.